Well, hello. If it's Friday, if it is 12 noon, you know this is the Consumer Advice Series, the About Mansfield Consumer Advice Series. I'm Steve Casillo, and thank you for being here today. And today, because it is Friday and because it is noon, we are bringing in our resident tax expert here, and that would be Adam Coen. He's smiling and shaking his head no. Like, come on now, you are our resident tax expert. And
I thought you were going to refer to me by my honorary title, tax manager to the stars.
well, that too. That's usually that I conclude the episode. so
I was preemptively shaking my head.
so I got a couple of things on the mind today before we get into it. First of all, happy Good Friday.
Yes, you too.
And it's April 15th, but it's not the last day to file your taxes
That is true. We've got till Monday. The 18th is the cutoff.
because today, April 15th, Good Friday is a holiday for some people. Is that right? Is Good Friday involved with tax day?
No, the IRS doesn't care. It's there's
Doesn't
a
care.
Washington D.C. uh, federal holiday, and I can't remember the name of it off the top of my head. And
All right.
Patriots, not Patriots Day, but there's another one around that time frame. So it pushed it to Monday.
So and this has happened before that we went into April 15th, extended into Monday, April 18th because of a holiday in Washington, D.C.
Correct.
All right. Let's get into today's topic, which is estate and gift tax. And before we get into the specifics of estate and gift tax, first of all, what is an estate and how does that differ? And then so yeah, let's get into the basics first of explaining to the watching audience and the listening audience of estate and what is an estate and gift tax.
Sure. So at its core, an estate is you. It's what you own at the time that you bite the bullet, or excuse me, kick the bucket, as we should say. And when you're gone from this world, you have accumulated value in houses and boats and RVs and checking accounts and retirement accounts, et cetera. Whatever the value of those things are, that's your estate when you're gone. And if you leave a substantial amount of an estate in terms of value, you may have, or rather, your estate may have a tax that is due upon transfer of the value of that estate to your heirs, your lineal descendants, et cetera, et cetera,
Would
and
that
whoever.
be probate?
Yeah, so that's the thing that happens is if you've had potentially bad tax and estate planning, you probably are going through the probate process. The idea is you avoid the probate process
Right.
and shift everything out through, like what we talked about in the last couple of weeks,
Yeah, I was going to say
trusts
the
and
trust.
various. Exactly,
Okay.
exactly. So, but if you have enough in your estate, and sometimes that can be a matter of multi millions, depending upon what the situation is. But $12 million, let's say, is a starting point. If the value of your state's there, then yeah, you might have an estate tax situation. Very likely, vast majority of people are not getting there. This is a niche issue for most people. But the other side of that coin is you give money away to your family throughout your lifetime. You have an amount that you're allowed to give during your lifetime to your kids and various other people total. And then if you exhaust that amount, then you can potentially start paying tax on your gifting in addition to all the other things you pay tax on. And so the gift exclusion is
Right.
by person. So there's a 16 that well it increases with inflation, right? So right now it's 16,000 a person this year. So let's say you want to give money to your kids, and your kids are let's say your son is married, you give 16,000 to him, 16,000 to your son's or to your daughter-in-law,
Hmm.
and there you go. You've attributed your maximum annual exclusion. If you're married, your spouse can do the same. So now you can transfer a whole lot more money gift through the annual exclusion, and there's
So,
no tax on that.
and I'm sorry to interrupt, but
No,
so,
go ahead.
all right. So we've got, hypothetically, we have one child. I can give 16,000 and my wife can give 16,000 to the same person?
Yep, and you don't have to file a return, and you don't have to pay any tax.
Wow.
Yeah.
And so if we have a family of 10, that's
Oh yeah.
okay. The next question, how many gifts can I make in 1 year?
As many as you want.
No way.
As many as you want. And keep in mind, there are things that are excluded by matter of rote. So charitable gifts, and that's never going to touch this exclusion. Money that you pay directly to an educational institution, that's never going to be included for somebody else's benefit. Money you pay to a medical provider for someone else's benefit, none of that stuff is ever included in the annual exclusion. It's just money directly given to a person. That's
Okay.
part of this, and they don't have to be related to it
That
either.
was my next question. Do they have to?
Yeah.
Can I give money to my next door neighbor?
Absolutely. I know him. You should give him some money. He'd love it.
Can I give money to Adam Coen?
You could if you wanted
Okay.
to.
So I can give you $16,000 or up to $16,000
This year, that's correct.
and deduct it from.
No, there is no deduction.
Oh,
So
but
it doesn't.
it's not being taxed.
That's right. So it goes against your annual, it goes against your annual exclusion that you get. And that's in addition to your lifetime exclusion, which is, for sake of this conversation, we'll say it's about $12 million. And so you've got that whole amount. And then you've got, if you go over that, then you can potentially have to file a tax return, a gift tax return.
Mm-hmm.
But so long as you don't go over your annual exclusion and your lifetime exclusion, you're not paying any tax on the gifting that you're making.
All right.
So as long as you don't give me $12 million, we're fine.
That's probably not going to happen.
Probably not. I mean, I can keep wishing, can't I?
You can.
Yeah.
So, all right. So let's kind of recap again. Estate tax, gift tax. Let's go ahead and recap what those are, and then how we work around those.
Yeah, and there's one more we haven't talked about, and
Oh.
I'll hit on it briefly. And so there's the estate tax, which is potentially due on the value of your estate after you're gone. There's the gift tax, which is potentially due on the lifetime gifting that you make, and you may or may not have to file a tax return depending upon how much money you give to any given person, and you've got an annual exclusion. And then you have what's called the generation skipping transfer tax. And that's also, again, very niche, but the idea is that you're trying to, if you were trying to avoid gift tax exclusions by giving to your grandchildren, let's say your minor grandchildren, instead of directly to your kids, there is potentially a tax there as well. And so there's another annual exclusion, another lifetime exclusion, same deal as with the gift tax. But again, most people aren't going to hit this.
Yeah.
But those that do have to plan around it in order to not pay huge amounts of tax, because the biggest part of this is the tax rate's north of 40%. And so it can be very, very costly.
I have a very important question.
Yes.
Regarding the annual gift tax exclusion.
Mm-hmm.
So if I give one of my children money, it's part of the tax exclusion.
Correct.
Would that also apply to the amount of money my daughter's wedding is costing me?
Oh yeah, absolutely.
Because wouldn't that be a gift to my daughter?
Technically, yes, but you could consider it. You could consider it a personal expense and then not consider it part of the annual gift. But I've never had anyone ask that question, Steve. And,
that's why I'm the host.
Yeah.
Yeah.
I think it would be funny just to file a tax return with the gift amount of your daughter's wedding.
Wow.
It's not funny for you, but it would be funny for me as the accountant.
But it's all about the loopholes, isn't it?
Yeah. Well, there's no tax benefit to you. It'd just be a matter of reporting it.
True.
Yeah.
if someone wanted more information about estate and gift tax and weddings, how how can they reach out to Adam Coen?
Call us here at the office. We're 817-231-0666. Don't call right now because until after the 18th, we're not answering the phone, I promise you. And then you can find us online, dfwtaxteam.com. And any one of us here can help you.
Adam Coen, tax manager to the stars, right here on About Mansfield. Let's do this again next week.
That sounds good. Cheers.